This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were little changed on Monday as investors eyed developments on a potential Russia-Ukraine peace deal that could ease sanctions disrupting global supply flows. Brent crude futures was up 7 cents at $74.81 a barrel at 0430 GMT, while U.S. West Texas Intermediate crude was stable at $70.75 a barrel. The market continued to keep an eye on progress of peace talks, after U.S. President Donald Trump and his administration officials announced they had begun discussions with Russia to end the war in Ukraine.
Tightened U.S. sanctions on Moscow have disrupted a roaring trade in discounted Russian oil to China and India, reviving demand for Middle Eastern and African crudes, roiling shipping markets and driving up oil prices. Washington's January 10 sanctions targeted tankers carrying Russian oil in a push to more effectively limit Moscow's oil revenue, the aim of Western sanctions imposed after its invasion of Ukraine 3 years ago. The new rules have left millions of barrels floating on ships and sent traders hunting for alternatives, while dealings in Russian crude, the biggest source for top global importers China and India, have slowed for March.
Moving on to the top news in the energy sector.
Asian spot liquefied natural gas prices rose to an over one-year high this week, amid forecasts of colder temperatures and as concerns over Europe's storage levels persist. The average LNG price for March delivery into Northeast Asia was at $16.10 per million British thermal units, MMBTU, the highest since November 2023, industry sources estimated. The average price for April delivery is estimated at $15.50 per MMBTU, the sources said. Trading will shift to the April contract as of Monday, February 17. The main market concern is the high rate of withdrawals from Europe's gas inventories. The region appears on track to import 11 million tons of LNG in February, said Siar Makadibi, Director for Gas and LNG Supply Analytics at FGE.
U.S. energy firms this week added oil and natural gas rigs for a third week in a row for the first time since December 2023, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, rose by 2 to 588 in the week to February 14. Despite this week's rig increase, Baker Hughes said the total count was still down 33 rigs, or 5% below this time last year. Baker Hughes said oil rigs rose by 1 to 481 this week, while gas rigs gained 1 to 101. Next, we have the top news in copper prices retreated from over 3-month highs on Monday, with the market focusing on the copper spread on the London Metal Exchange swinging into a premium. The 3-month copper contract on the London Metal Exchange, LME, slid 0.3% to $9,449 a ton by 0814 GMT. The copper on the Shanghai Futures Exchange slid 1.0% to 77,030 yuan, $10,616.04. Short covering on the LME ahead of contract expiry amid expectations of U.S. duties on copper triggered a sharp move in a key spread last week, after U.S. President Donald Trump announced plans for reciprocal tariffs, which will not be immediately implemented.
Short covering on the London Metal Exchange, LME, ahead of the expiry of contracts next week amid expectations that U.S. tariffs will be imposed on copper triggered a sharp move in a key spread on Friday. Worries that U.S. President Donald Trump may impose tariffs on copper had spurred traders and investors to buy copper on the U.S. COMEX exchange and sell on the LME. Short or bearish positions on the LME are being cut or rolled over ahead of settlement on Wednesday, turning discounts for nearby copper contracts against those further along the maturity into premiums or backwardations.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures slipped on Monday, as weakness in soyoil prices and the lower palm oil exports estimates in the first 2 weeks of February pressured the market, while India potentially raising vegetable oils import taxes caused further concerns. The benchmark palm oil contract for May delivery on the Bursa Malaysia Derivatives Exchange slid 14 ringgit, or 0.31%, to 4,485 ringgit, $1,013.10, a metric ton at the midday break. The contract rose 0.83% in the previous session. Crude palm oil futures were trading lower due to weakness in soyoil markets and a weaker Malaysian palm oil export performance for the first half of February, said Anil Kumar Bagani, commodity research head at Mumbai-based Sunvan Group.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.